We've only got an hour. I'm really excited about this. I say that about every speaker that comes on, but I'm even more excited about getting Chris on. I met him and was introduced to him. It must have been over a decade ago when he was down in South Africa presenting at a bank that shall remain nameless. And I remember sitting there listening to him talk about the disruption that's coming and how the banks and the leaders of the banks have actually got to go and get their heads around this and start to try to be more innovative and creative and fight this tsunami, because technology is allowing these startups that are actually coming through. Unfortunately, that said bank didn't listen to a word of what he said and have been hemorrhaging customers up the hundreds of thousands per annum ever since that particular point in time. But they're not the only one. Most of the incumbents have made the same mistake. So Chris Skinner, I want to welcome you. My favorite troublemaker, my favorite disruptor. I love your blog, The Financier, and everyone that hasn't ever read it, they should actually get onto it, thefinancier.com. You're speaking, you're influencing, and the advisory engagements that you're giving for CEOs across the globe in terms of what's happening in financial markets. It's a wonderful pleasure to have you on board today.
You're very kind, Cole, and nice to see you in a warm South Africa, I assume. I'm here in a cool Poland.
Yeah, it's, what is it, 20 odd degrees down here. So I'm going to kick off, we've titled this, post-pandemic strategy, but I want to start in the past, if we can. And I want to go back to that kind of 10 years ago and some of these predictions. I'm gutted because there are still the same banks providing these dreadful services, which I'd have hoped by now would have started to actually been seeing more significantly disrupted. What's gone wrong here, Chris?
Well, I mean, for the whole of my working life, people have been saying that banks are not good in terms of customer service. And you wonder why, for all these years, if they're not good at customer service, there isn't a new competitor out there that's taken over. And the answer is that because of the regulatory structure of banking and the nature of money, it doesn't get disrupted. No matter what people say about disruption and destruction of banks and disintermediation, it's not going to happen. It hasn't happened. And the reason it hasn't happened and is not going to happen is that the customers are not willing to switch, both corporate and retail, once they have a bank, because the nature of money is that psychologically we just want it to be safe. And as long as you provide that function, then that's the job that needs to be done. And the nature of being safe is you're regulated and backed by an insurance scheme that is government endorsed. And that is the banking license. So to get a banking license is very difficult. And once you've got it, the customer will join you because you're safe. And they typically join the brands and the banks that are the biggest names out there. So when a new bank launches, it doesn't have that trust. It takes ages to get it. And by the time it's got it, it's normally acquired by a big bank anyway. So that's the reason why it's not changed in my working life.
Do you think that's going to continue? So I'll give you a couple of examples. I mean, these are all examples actually that you've written about. So let's look in the UK at the moment. Let's take TransferWise. I think TransferWise are awesome. If you don't know what TransferWise do, look them up. If you can use them, use them. They are probably the best FX cross-border payment platform I've ever used. It's transparent, it's open, it's quick, it's easy. And whether I'm drawing funds from dollars into rand and moving it down here, or from euros into dollars, very rarely do their prices and their spreads get beaten by other competitors. So they're phenomenal. Aren't the banks just facing this type of attack on all fronts? And at some point, they're going to have nothing left of value to offer to people to make money from?
Well, there's two aspects to what you just said. The first is that I also use TransferWise a lot because I'm here in Poland and my bank is in England. But someone said to me the other day, why don't you use Santander's OnePayFX, which is it's basically a FX system based on Ripple. And the other day I was transferring money to Poland, and the exchange rate currently on the spot markets is about 5.22 zloty to the pound. On Santander OneFX, I was getting 5.15. On TransferWise, I was getting 4.5. So TransferWise right now, because of the pandemic, has some issues and is leveraging profit on their FX rates and fees, which is a shame because you would like to see the challenges being more challenging in these times rather than trying to take more profit. But TransferWise is taking more profit. On the other hand, one of the things I keep coming back to and saying quite a lot is that the boring old banks, because of their service and structure, will be left with boring old bills and boring old transactions, like paying the mortgage or the loans or doing FX transactions maybe. And what is actually happening is that the more exciting banks like Monzo and Starling and Tandem in the UK, or Bunk, NAB, N26, Chime, are all getting more of the lifestyle structures of the customer. So when the customer lives on their deposit account, it used to be with boring old banks. That is definitely moving away to the new banks, because the new banks, what they do really effectively is the analytics of what you're doing with your lifestyle transactions. And the old banks don't have that capability because of their old legacy structures. I liken it to a memory I have, particularly of going to Rwanda. And everything in Rwanda is contactless payments and mobile wallets. And I said to the driver of my car, so when do you go to the bank? And he said, I go to the bank for the complicated stuff. You know, if I need to do a foreign exchange transaction or remittance or get a loan, I might go to the bank. But my lifestyle is now in the mobile wallet. And that's what's happening with the challenger banks in Britain and in many other nations.
Does that still allow them to actually survive, or do you think there'll be some consolidation here? Because their margins are going to get tighter, they have to. Maybe they're there for the more complicated, so more structured, so it's more expensive products which require people. You can't automate and use AI so quickly. You've got this really expensive branch network, these really expensive legacy systems that are in there. So they're really limited in terms of reducing their kind of cost base to go and service this. And it's kind of, I don't know if this is a good thing. I'm worried you're going to start to see them become less profitable to a point where they actually are going to have to start either consolidating or closing just because of natural forces for the first time in certainly my lifetime, that would be.
Yeah, I mean, this is the core of the big issue that is the elephant in the room, to be honest, which is when are any of these companies going to make money? And it's all well and good to point to Amazon or other companies that have made losses for years. At the end of the day, what they're dealing with is transactions that, even if it's just 1 cent, can be a profitable business structure because of the volume of the transactions. And it's volume of transactions that's the key here. So some of these companies, like Stripe, are definitely getting enough fee on transactions to be profitable and have a viable long-term business model. But I think right now there's questionable structures out there, and this crisis is going to bring that to a head, because there's an awful lot of unicorns and centaurs, which is the less than $1 billion valuation companies, that have been living on a dream of long-term idea, and the idea isn't viable. I'm not going to name names, but I could point to a number of fintech companies that I've always thought it's questionable about their long-term business model. And even with the valuations they're getting, it's questionable. And right now, I think it's even more questionable. What's going to happen right now is that the innovators that are doing interesting things during this crisis will probably survive and get more funding post this crisis. But there's quite a few that are just like rabbits stuck in headlights, and I just don't see what's going to happen for the long term.
We could just go through a few names and see if we can get you to nod your head or shake it like Revolut. Okay, we won't do that. What about?
I'll do my emperor thing, you know.
Let's see if we get some names. If the audience, if you've got names, let's we'll put you on the spot. What about blockchain? I think this has been fascinating, especially on the Bitcoin side of things, and all of the variations that are coming out on the other side from companies like Ethereum. Casino gambling at its most global, I suppose. What do you think about this? And it's not just the gambling. Is there any real opportunity? Is this going to become something, or is it going to just fizzle out?
I mean, I'm still bullish on the overall theme of distributed ledger, blockchain, and cryptocurrency. I still have big questions over things like Bitcoin and some of their cohorts. I think Ethereum definitely has a viable future because so many businesses are buying into Ethereum distributed ledger technology structures that long term it should succeed. It does have viability. It's interesting in the crisis as it hit that Bitcoin and then all of its associated cryptocurrencies took about a 40% downturn in value, because everyone's always said this is going to be, the gold of the future. It's digital gold. Well, it's obviously not digital gold because it's got nothing backing it. Interestingly, if you didn't see it last week, Libre came out with Libre 2.0, which is now going to be a much more stable coin basket of currencies with dollar backing than before. But
just in case anyone on the call hasn't heard of Libre, do you want to just give them the sort of the heads up on what it is and who's running it?
Libre is the Facebook cryptocurrency, or digital currency if you prefer. And actually what it ended up doing is, as soon as they announced it, I said it would fail because governments would shut it down, mainly because nobody trusts Facebook. But Facebook has still persisted with the idea of doing a digital currency within the Facebook community that would support over 2 billion people. And if they do get it out there and can avoid the regulatory shutdown, then it would be quite incredible because you'd suddenly have a global currency for over 2 billion people. I just don't see how they'll ever get it out the door, because what's happened as a result of their announcement is governments are now saying, well, we don't want that. We want to have a digital dollar, a digital yuan, a digital rand, a digital pound, a zloty, whatever. So all the governments have actually woken up very quickly because of Libre to doing their own central bank backed digital currencies, or CBDCs as they're called. So that's a huge trend that's risen up. And then going to the point about blockchain, I wrote a book, Value Web, all about blockchain and the whole idea of doing cheap databases that are distributed, decentralized, and shared. And it's a wonderful idea. The problem is that the main use cases for that idea are in incredibly complicated areas such as digital identity or clearing and settlement. And when you look at these areas, what you find is that it's not actually a technology solution that's the issue. It's the agreement between government, institutions, and business and consumer that is the structure that has to be agreed. And that's hugely complicated in that if you just take digital identity, getting anyone to agree about digital identity as a structure is a massive ask. And there's very few people who have cracked that nut. And it's not going to be cracked by blockchain and distributed ledger. It's going to be cracked by maybe the United Nations and World Bank. But then it has to roll out through so many countries. It's really difficult.
Yeah, we've got a question which you're kind of half answering. We'll bring that up now from Andre Esterhazen. Is cryptocurrency a more cost-effective way of foreign money transfer? Banks are far too expensive. Do you want to just expand on what you were saying about the mechanism in place and not the technology making this the difficult thing?
I think the main thing I'm saying about technology is that the internet provides a fantastic platform for peer-to-peer exchange and doing that in real time. And so it flattens the transaction and the value exchange. So before we'd have to do this with some form of human intervention and oversight, and now we can do it with a pure algorithm. And my best example is the peer-to-peer lending markets, where we can take $1,000 of investment and spread that over 100 people to minimize the risk and to maximize the return. And by doing it through an algorithm, we can give you far more return on the investment and far less cost on the borrowing than a physical institution could ever compete with. So that's the thing that we're seeing across the board right now in terms of peer-to-peer innovation in the fintech community and in the technology community. And that's what most startups are doing really well. And it's the reason why payments is the #1 fintech application. And lending is the second most common fintech startup focus point. But the trouble is, going back to our opening, is that a lot of consumers don't trust new things. and they don't switch easily. And same with businesses, because they worry psychologically about money being safe. And it's very easy to see something that makes you feel unsafe. In fact, I just got something this morning as a announcement around a survey that had been done by one of the fintech startups using YouGov in Britain, which is a research company. And they polled over 2,500 consumers. And even when they get communication from a bank digitally, a third of consumers do not trust that communication from the bank digitally. And I think this is the core issue, which is trust. And it really is around money, which is the most important thing in your life, and who looks after it, and can you trust them, and are they regulated effectively? And it's very difficult in a technology platform, peer-to-peer community, to get that trust.
What is really good that you brought that up, actually. What are you seeing or expecting to see? Because you've got some big peer-to-peer lenders in the UK that have been growing exponentially for a decade or more. You know, companies like Zopa and Lending Club. What are you expecting to see from those guys? Are they going to ride through this, or are they going to suddenly start seeing default rates which compete in the worst way with banks?
I mean, every one of them is different. I think some of them might fail. I don't think Zopa will, because I know them very sort of intimately, mainly because I was running a club in London that had a meeting every month of people who were interesting. And way back in March 2005, the speaker at the club was Richard Duval, who was one of the co-founders of Zopa. And it was actually a couple of days before they launched Zopa. And his idea was an eBay for loans, and we all thought he was stupid. Wouldn't say that to his face, but at that time it was such a weird idea, an eBay for loans. But it's worked out very well, and the reason why I mention this is that if they launched, as I said, back in March 2005, they've already been through a crisis, the global financial crisis of 2008. They've run their algorithms, and when they started, they actually turned away a lot of viable borrowers because their algorithms were really Loctite safe, and their default rates were about 0.6% after 5 years, which is incredibly low. It's risen to about 0.9% because they've allowed a wider market access, and now they're launching a UK bank. So I think they'll be okay. Right now, obviously, the question is, so many people need loans. What is actually going to be the structure post-pandemic? When will people pay back loans? How will government react to the backing of borrowing? What actually is the stake that banks and fintech companies and innovators have on the table here? We have no idea, because we have no idea how long this will last. I don't know if you can answer that question, Cole, but at the moment, I'm hearing everyone saying it's anything from September through to 2022 by the time this thing finishes. We have no idea. So,
yeah, anyone that speculates on that really, they're in dangerous territory. The one question before doing exactly that and starting to speculate about how to go and deal with it post-pandemic, I really enjoyed your book. I think it was. Which was the book that you did about Ant Financial and China and the rollout of the mobile currencies there?
Yeah, that was the last one, Digital Human.
Yeah, Digital Human. I really enjoyed the case studies, and what struck me was just how quickly in China you saw those mobile currencies kick off. If I remember, in the spirit of about 4 years, they went from zero to having 700 million active users on their mobile phones doing effectively digital M-Pesa type transactions amongst themselves. You had a QR code system which was implemented, so even beggars on the street could have their QR code literally on their T-shirts, so people could make instant payments to them through that sort of virtual currency world, so that businesses could start up with kind of 0.0001% transaction fees using their virtual wallets and those virtual currencies. And then I think the last thing that just was stunning was that the actual turnover of money going through that was something like $20-odd trillion, which is more than the GDP in places like the United States. That happened in 4 years, okay? What is keeping Africa back? Because we're not seeing that same viral adoption, which could be so beneficial to so many of the unbanked community in Africa.
Yeah, I mean, China's mobile wallet rise has been phenomenal. And it started in 2012 when Tencent, which has WeChat Pay and WeChat, started to compete with Alibaba with Alipay. And they launched the Red Letter Days, which is Chinese New Year gifting of money. And basically that escalated rapidly, as you say. In fact, to the point where I think last year, the figures vary, but it's around 35 trillion US dollars being transacted through mobile payments. And if you go to any of the Chinese tier one cities, the biggest cities, which obviously you won't do at the moment, but you know, before the pandemic, if you tried to offer them cash or a card payment, they would look at you like you were from another planet, because everything is mobile QR payments. And now that's also a trend that we're seeing in India, Pakistan, and other countries. And in fact, what Alipay have done, Ant Financial, which is the parent company of Alipay, is exported their technologies to many other countries using apps and APIs and cloud. And it's an incredibly successful strategy and company. The reason why it's not working yet in Africa is that Africa, so many people refer to as like it's one country, and yet it's not. It's many countries, as you will know. And what I've seen in my visits to African nations is that every nation is incredibly different, politically, socially, culturally. So in Kenya, everything is run on M-Pesa. In Zimbabwe, everything is run on mobile, but with Equitel. In Tanzania, there's far more interoperability between providers. In Rwanda, it's quite a good competitive market, and incredibly, it amazed me is that it's the 9th safest country in the world, and it's run by women. 63% of government in Rwanda are female. In Ethiopia, when I went there, I was shocked that nothing is mobile payments. It's all cash. So every country is different, and I think it's similar to the challenge that we've had in Europe and South Asia, where we talk about trying to develop consolidated structures that have critical mass, but it's really difficult to get critical mass when you have disparate nations and fragmented countries, and when each country on its own is actually quite small. You know, 1.3 billion people in China can make something like WeChat Pay and Alipay succeed very quickly. 50 million, 40 million, 20 million people in a country that's actually, yes, part of a region, but it's not an integrated region. It doesn't work. And this goes to the heart of the Euro project, which is, you know, the whole Euro and European Union project is to try and create a harmonized region of 650 million people, which, to be honest, right now, it's falling apart.
What do you think about, I don't know whether we want to start on the positives or the negatives here. Perhaps we should start by saying, obviously, this in general, there is nothing good about this. It's a complete disaster, the pandemic, and our hearts go out to anyone that's negatively impacted. But it is what it is. And I think from a business and an individual perspective, we've also got to look at it just practically and say, how can we make the most opportunities out of this? How can we go and actually use this to go into some sort of strength? And I know that you're consistently writing about this on your blog on financier.com. Do you want to share some of your initial kind of musings and thoughts about how we can turn this into something that's a positive?
Yeah, I mean, it's worrying in some ways from my personal perspective that I'm blogging and I'm not an expert on anything. I spend all my time obviously in technology and finance, so I could claim that I have expertise in technology and finance, but I've become very philosophical in the last 2 months. So from my own personal perspective, I was at home here in Poland, late February, early March, planning to disappear for 6 weeks from mid-March to end of April on a global tour promoting my new book, which all got postponed, straight cancelled. So I've actually been in lockdown for over 2 months. And you do wonder when you're writing and musing whether you're actually writing in something that makes sense, because it's not about finance and technology anymore, it's about life. And I think the interesting thing as a positive, and hopefully all of you are feeling the same thing, is that being stuck at home is not a bad thing if you have family, because for first time in our lives, we're spending 24/7 with our partners and our children, maybe our parents, and you realize the priorities in life are changing. in that the priorities in life before may have been all about money and work, whereas now it's all about family and relationships. I found myself bonding much more closely with my family and actually with a lot of work people through Zoom, for example, than before, because we're spending far more focused quality time prioritizing friends and relationships than work and money. And so in many ways, we should say that's a good thing. You know, the fact the world has paused, I know a lot of people are, particularly in America, because America's got a very different society structure, um, are melting down because they have financial worries. They start to pay bills. Luckily, in the UK, the government's brought in a lot of action that says we can defer our bill payments until it's over. So the financial worries are far less. And if you take finance, money, work out of the equation and you bring it to what's left, it's your family. And so I think that's a really positive thing in many ways.
What about outside of the family? Where are you seeing positive impacts in the way that either institutions, governments, society at large is working?
Well, I do see a lot of the innovators, the technology companies coming up with new ideas. And going back to blockchain, you know, there's a company that I know that actually has created a couple of partnerships where you can register for benefits distribution in the UK on their website using distributed ledger technology based on your social security number. And you get the payments delivered in an app within 24 hours, assuming everything is verified. And you might say, oh, but fraudsters could buck that system. And the fact is that they do a kind of triangulation between social security number and address and other details to make sure it's only delivered once and not on multiple occasions to the same person. And they created that within 2 weeks of the crisis in the UK starting. I've seen the same with other fintech companies. So one of the things I keep saying is right now, a lot of the fintech companies were getting probably towards the end of their last funding cycle and will start looking at their next funding cycle. Some were quite lucky, they just got through that. So 86400, a challenger bank in Australia, just got their funding cycle completed before the lockdown. Revolut in Europe, the same, Stripe in the USA. But any fintech company that was reaching the end of their last funding cycle when this hit, this is the time when it's going to sort the wheat from the chaff, because you're going to have some that are still doing amazing things during this process and innovating around their business idea, and some that, as I said earlier, are like a rabbit in the headlights and they're just going to melt down and they won't get their funding next time because the investors will say, you didn't perform during the crisis.
It's not just a happy story though, is it? I mean, I've got a feeling that we can also expect the worst of humans to be coming out, and we equally need to be aware of that as we're setting the strategies. Have you got any thoughts about where we should be watching and hoping, keeping our fingers crossed we don't see what you're about to say?
I think the biggest thing we have to look for, and again, it's on the government's table to deal with this, it's civil unrest. In that one of the things that stays in my mind throughout all of my life is the film Metropolis, which, if you haven't seen it, it was created by Fritz Lang in 1927, a black and white movie where there's a wealthy above ground class and workers underground, and the workers are the masses and the above ground are the few. And I think the inequality we were seeing in society before this pandemic, and that was actually the hangover from the global financial crisis with the 1%, is going to be something that's even more exaggerated once the lockdown ends, because you're going to see, yes, there's 99% that don't have the wealth, but actually now there's probably about 25% of the 99% who not only don't have wealth, but they don't have anything. And so what do you do when you don't have anything? You riot. Now, it's a bit bleak picture. I hate to say it, but I just have this concern personally that post-pandemic, we're going to have to rethink everything about money and society and government and business to make sure that we can support the masses and not just a few. One of the things that a lot of people will talk about is the universal credit, universal basic income. I don't even know if that idea succeeds. You know, when I see the experiments that people have done with universal basic income in Finland, for example, and in other countries, it's not proven as an idea. And if people don't have to work, don't have to, you know, get money, what do they do?
Yeah, what do they do indeed? I was hoping that this might be one of the benefits, is that we can test universal basic income. Certainly you're doing it to a certain extent in the UK now, because you've got to remember, this isn't just one black swan event. This is really a precursor of some of the disruption that we can expect over the next decade, the next 2 decades, just because of the normal technology development cycles that are occurring, especially with artificial intelligence, autonomous cars, you know, huge numbers of redundancies across sectors as diverse as medicine through to drivers, because technology's allowing the automation of those processes. So perhaps we can get a bit of information from this crisis, which helps us for the kind of next things that are coming very, very quickly indeed.
Well, I mean, one of the things that's come out of this crisis is that you have to be digital. You have to be digital. Anything that's physical is failing in this crisis. And by way of example, personal example, is that I have a credit card, a corporate credit card with a company in the UK. When the crisis hit, their call center shut down, and their call center was based in India, and India closed with 4 hours notice. So 6 weeks later, I still cannot call this card issuing company because they have no backup to the Indian call center operation. Their website failed. Basically, there was some technical glitch. I couldn't get an online access. So I can't get online access, I can't call them. And that lasted for over 6 weeks. And it basically is because they had no digital backup to their physical structure. And this is the point that I'm making quite regularly now on my blog and in my thoughts, which is the crisis will create everyone being much more acutely aware that you have to have a digital backup to a physical operation. You can't just depend on the physical operation. We did business continuity planning and disaster recovery for our technology. We never did it for our office. We have to do that now for our physical operations. But the second thing is quite interesting, going back to Alipay in China, in that obviously China had the issue first of the coronavirus pandemic. Alipay, working with the People's Republic, created a part of that app that had a green light or a red light based on the health of that individual. And if you had the green light, and this is based on testing, then you could travel, but you had to have other verifications. But they had a digital health monitor basically operating in China very early on, delivered by Alipay, which is the most ubiquitous wallet in the country. And I think that digital health monitoring is also going to be something that's very big post-pandemic, which is saying, you know, you can only travel if you can prove that you are, you know, of good health. And if there's anything wrong with you, then A, that's going to be picked up by the facial recognition and human recognition systems that are monitoring what we do. And B, you have to have the credentials that you can show digitally that you are healthy.
What sort of leadership styles do you think are going to navigate this crisis more effectively? Let's get more into this, you know, what can you learn from the pandemic for future success? What sort of companies do you think are going to use this? It's going to be tough, but they're going to get through, and they're going to have my word, some proper advocates for their brand over the next coming years.
Well, I mean, this crisis is a gift for Amazon because, you know, the only way I've survived this crisis personally is because I can still order stuff on Amazon and get it delivered. So offline to online and digital backup is the criticality. The digital giants will get to be even bigger. We've seen that with Netflix. You know, everyone's stuck at home. So what do? You binge watch Ozark or Lilyhammer or whatever on Netflix. So those things are becoming notable and will be even bigger post the crisis. I think a lot of the physical stores and retailers and the airlines obviously are going to be really massively impacted. No airline is ever going to go back to an old normal because, you know, I mean, I traveled nonstop before this crisis, and I'm thinking, do I really want to get on a plane to go to another conference? Yeah, so I might, but it will be very rare, and it will have to be very worthwhile for me to do that. And one of the things I was musing about, and it's a blog that's coming out later this week, because I do pre-write quite a lot of them. But governments around the world have handled this very differently. And in particular, obviously, I look at the UK and the USA and India and China as the biggest nations, and UK because it's my home nation originally. And I'm living in Poland, and Poland did a lockdown 2 weeks after the first death from coronavirus, and with 24 hours notice. So all international air travel was banned with 24 hours notice. The airport shut. China, as you saw with Wuhan, shut really quickly once they could see human-to-human transmission of the virus. The UK had the first coronavirus death around 20th of January and didn't lock down until the 15th of March. So it was almost 2 months. The USA, as we've seen, is a complete disaster. And the difference is that in nations that allow freedom of speech and freedom of expression and democracy and are very capitalistic and economically focused, we're very much slower to react than those that are more autocratic and where citizens are much more governed by the central authorities. So the idea of locking down the USA within 2 weeks of a first death would be something that Trump wouldn't have done, and obviously he didn't do. And same with Boris Johnson. Boris Johnson was saying, just wash your hands for 20 seconds, singing happy birthday to me. I think he regrets that now he's had the coronavirus. And to me, it demonstrated the difference in styles of governments. And to be honest, I didn't like what the Polish government did, closing down the airport with 24 hours notice. And at the time, I was really moaning about that decision. Now I look back and say, you know what? In some ways, it's great to be in a country that's more autocratic, because they have
South Africa to your debate there, because we closed down and went into lockdown before I think there'd even been a single death.
Yeah.
I think we're genuinely recognised as having learned the most from all of the episodes in Italy and China and the United States, and being the most proactive, so they can take great pride in that. I'm English as well, but
just final one on that. I retweeted this yesterday from an Indian commentator, which is India. I can't remember the exact numbers, but it's like 16% of the global population and 0.4% of the coronavirus deaths. America, 4% of the global population and 24% of the coronavirus deaths. And it just is about, the Indian government shut down with 4 hours notice, which is terrible. But having said that, they've protected the people. And that, to me, you can sit and say, you'd rather be in a laissez-faire democracy than a autocratic dictatorship. But somewhere in between those two is a balance. And my views on the autocratic dictatorships has changed a little bit during this crisis.
I've got a great question here from Anton Musgrove. I think you might know each other. If you don't, you should, because he's another wonderful chap like you. He was actually our first speaker on the series. Do you see global business leaders and institutions agreeing to a reset of what drives capitalism, more conscious capitalism?
To an extent. I mean, this crisis, Martin Wolf in the Financial Times, another great commentator, was writing the other day about, he thinks this is where China's ascendancy into the global superpower is turbocharged, which some might think, well, did China create this crisis to take over the world? They didn't create it, hopefully. But it came from China, and they are going to reset much more quickly than America or many of the other nations, because they did lock down quickly and they are run centrally, and their citizens behave as 1.3 billion people in line with what the government says. Otherwise, they get thrown in jail. So there will be a reset, both in terms of the superpowers and in the attitude towards capitalism. I think a lot of us are, again, going through existential questions around things like, what is money? How does money work? What is valuable? Because obviously it's not paper money, because it's got germs on it. So how we think post-crisis will reset, definitely. And it's interesting, there's a new book by Thomas Piketty, who's the economist who everyone followed his book in 2013 about how capitalism is changing and the issues with capitalism. And his new book is basically saying that there will be a reset post-crisis where we will no longer focus upon money, commerce, profit, and capitalism in the way we did. It'll be far more inclusive and sharing and changed. Maybe it's a little bit sort of hopeful, but I like the idea of an inclusive world. So if we do get that, then I'm all for it.
Well, there's some good examples that give us some hope, aren't there? I mean, let's just take some good and some bad. Disney, okay, pays out dividend to its shareholders, pays out bonuses to its leadership team, and then goes off and says we're going to sack or put on furlough 100,000 staff. I do not want to go to Euro Disney anymore. I don't want to watch Disney. I'd much prefer to do Lego, which has invested 25 million, dollars or pounds into going and supporting people, and then trying to go and offer all of their online platforms for free for people during the crisis. Lego is a purpose-driven organization. Disney is clearly just going for profit. If I look at the banks, let's use banks as that's both of our respective areas of interest from history. Banks that continue to pay out bonuses for their 2019 staff rounds and pay dividends to share. I'm just not interested in banking with them anymore. I don't want to deal with them. I've set up a website called Purposeful Organization. I never want to see that brand on that website. Whereas other organizations that are trying to help, they're doing the right thing, they're cutting back significantly, then you want to run with those organizations. They've got my heart wanting to go and support them. And I just wonder if we're going to see more of this and whether it sustains afterwards. So we really do have this purposeful, conscious type of leadership that's going to go and get the benefits of this particular crisis as we go and choose more discerningly over time.
Yeah, I mean, I haven't decided 100%, but the theme of my next book that's been bubbling away with me is purpose-driven banking. And it's based on banking cannot just be about shareholder return and profit and executive pay and bonus. It has to be about being good for all the stakeholders and stakeholder community focus of customers and community and employees, as well as shareholder and management. And equally, one of the things that struck me when I went to see Alipay is that Jack Ma had this philosophy of do good for society and good for the planet. And that's a theme I think that resonates more and more. And we'll see more and more people following that mantra, which is if you are purely focused upon profit and shareholder, vis-a-vis your example of Disney, then long term, you're not an inclusive company. You're not actually doing good for society and the planet. So you will be rejected. Whether that is true after this crisis, we shall see. I certainly think it will bring it to a head, and people will start to question, did you look after me and my family and my community and society as we went through this existential moment, or were you just a complete corporate marauder? And if you were the latter, I won't deal with you again. Having said that, I'll still go to Euro Disney.
Yeah, okay. Do-gooders. Are you seeing good examples of companies that are trying to do the right thing? Especially in financial services, obviously, or is this a foreign concept for most of the incumbents?
No, I mean, I do point out that there's a few financial institutions at the moment that are doing interesting things. They're often very small. So, for example, Citizens Bank of Edmond is a community bank in the USA, and their chief executive has been very, very vocal in social media and in online conversation to say what they're doing and how they're supporting their community, and that their customers shouldn't worry. Any customer who has worries, just talk to us. And equally, some of the challenger banks like Monzo have been doing very public demonstrations of how they're supporting customers, and their executive team stepped down, taking zero pay for a year, trying to look after employees and not necessarily furlough them. But it does tend to be that it's not necessarily the big institutions that are doing as well, because I mean, I sympathise with the big banks because I'm sure it must be true in South Africa as it is in the UK and other countries. They're getting 10 times the volume of calls from customers, and they have 10 times less staff because the staff are all working from home, or they're not being invited to come to the office. So it is difficult to do good in current situation. But the biggest difference is probably the fact that the challenger banks, because they were born on the internet, already understood working from home and digital structures. The traditional banks, because they're built for the office and the institutions, have their physical operations and just weren't ready for this at all.
How important is digital? I want to ask that question. I suppose I just want to throw back at you. I don't know how closely you follow Discovery and Capitec, for example, in South Africa. I think those are two very purposeful organizations. Discovery in the insurance and Medicare world. They've got this underlying goal to go and help people live longer, more healthily. And pretty much most of those decisions that their CEO Adrian Gore, drives, as long as they're based around that, you can see, them doing some really awesome things. They've just been on LinkedIn yesterday highlighting how they're going to go and pay all of their creditors within the next couple of days, which I just think is a wonderful gesture from such a big listed entity compared to others that are out there. Same with Capitec. Very strong, purposeful organization, simple, affordable, understandable banking services, very transparent. And I just get the feeling that both of those are going to do so well from their brand over the coming 12 months on the back of this pandemic, because they don't have to change. They keep doing what they were already doing, and they get that consumer customer advocacy where the others are scrabbling because they've been too focused on profit and placed their shareholders at the front of the queue. And they don't have much sympathy or empathy from their actual customers. They're just treated as a necessary evil as part of that service offering. Am I being totally unfair? Or are you seeing similar things in UK and elsewhere?
Well, I mean, we spoke about Discovery and Zero and Capita and other examples in South Africa, but equally around the world. And on the one hand, I get the impression that a lot of the new companies, because they were built and born on the internet, are doing innovation very quickly and easily during this current process. But on the other hand, what customer base do they have? What profit do they have? And how long a run rate do they have with their current level of burn in terms of overhead? And do they have the ability to reset quickly and deliver quickly? So it's kind of that balance between, yes, there's a lot of good companies out there doing really interesting things, but do they have the run rate to continue for 6, 9, 12 months?
Does profit matter anymore? Amazon, 20 years before they get their first profit. Tesla, I think it was earlier this year, they've got their first profit, but it's just a blip against a decade of losses. It seems now people go for value. Hey, I want to get behind this really cool company trying to do amazing things. As long as the share price keeps coming up, I'm happy.
Yeah, but the examples you give, like Amazon and Tesla, by not delivering profit for decades, have become the largest companies in their space. And their valuation overall is based on the expectation of the future, which is that they'll become even more dominant. And Amazon's dominance is proven during this crisis. Jeff Bezos became $24 billion richer in the month because they're so good at online to offline. So profit does matter, but and that is actually an interesting comment, because there was one particular challenger bank, N26, whose CEO said profit is not one of our metrics. And as soon as I saw that as a quote, I just thought that company won't have a good long-term future, because any investor, private equity, venture capital, wherever they're coming from, has to see that there will be profit at the end. Even if it's 20 years away, there has to be profit at the end. And the reason why Amazon got the support it got is mainly because people could see the market dominance that this company would have in the future. And Alibaba's done the same in China, for example. If you don't see that there's going to be dominance and long-term profit, there's no future.
I know Lemonade in the US, their CEO made a similar comment. This is an insurer saying that assets under management wouldn't be one of their primary metrics.
Yeah. I kind of, I would just question that fundamentally and say they might feel that way right now. It's kind of like the same comment that was made 10 years ago by fintech startups that they were going to destroy the banks, disrupt the banks. 10 years later, they haven't really. Yeah, they made the banks sit up and wake up and take notice, but the banks aren't destroyed or disrupted by fintech. And in fact, that's the theme of the book that's just come out, Doing Digital, which is literally just launching this month. Because I got fed up 2 years ago with people saying banks would be destroyed by technology, even though I might be viewed as one of the people saying that, because I took the view they won't be destroyed by technology. They're just really challenged by it, because banks weren't built to be technology companies or to be built on the internet. They were built for physical distribution in buildings, and their competency at the leadership level is all about risk and compliance and regulation and all the things that go around money, from accountancy to audit. It's not about technology. You know, the leadership team doesn't have technology experience or foundation, and the company doesn't have technology structures or foundation. And that's the biggest challenge. So the new book I just completed was based on identifying some banks that I respected, that I thought were trying to deal with this challenge well, in terms of digital transformation. And so I wrote a list, this is about 2.5 years ago, of all the banks that I thought were doing digital transformation well. And it ended up that 5 were my priority to talk to, because there were 5 of the biggest in the world: JP Morgan Chase, BBVA, ING, DBS in Singapore, and China Merchants Bank. And all 5 agreed to be part of the project for the book. And I interviewed their C-suite in depth. And out of that, I ended up with about 35 lessons that you have to have if you're doing digital transformation. It's not an ABC or a 1, 2, 3. It's basically the themes and the things you have to have top of mind as you're doing change. And those 35 lessons fell into 4 major buckets, which is you've got to work out what to do and how to do it. Then you have to do it, and then do it better forever. And those 4 phases, well, the first 3 take about 5 to 10 years. The last one is forever. And the biggest thing that hit me was I was talking to a CFO of one of the banks, and she said the previous chief executive and chairman knew the bank had to change, but they didn't know what to change or how to change. And then the new guys came in and they had a plan, and they knew what to change and how to change. And the banks therefore become very successful. This was DBS. And I always come back to the quote from Charles Darwin, which is the survival of the species is not the fittest, the most knowledgeable, or the fastest. It's the one that's most adaptable to change. But then I'd add on to that quote, if you know what to change in the right way. Because if you adapt to change in the wrong way, you're going to fail. And so many banks are doing digital and assigning it to someone who's a chief digital officer and giving them a budget and making it a function and a project. And they really don't get it, because like digital transformation has nothing to do with technology or a project or a function. It's a mindset change. It's a cultural change. It's a people change. It's a business model change. It's a structural change. It's nothing to do with assigning to some department.
Yeah, and so many people think that if they get a chief digital officer or a disruption officer or a, ahead of it, that they're going to go and solve all the problems. And yet it's something which the whole organization's got to get their hands around. You said it a number of times, digital must be one of the big learnings on this pandemic. That switch of behaviors as we move home, and suddenly, whether it's Amazon doing delivery, so there's going to be drone delivery. How do you expect technologies like, for example, VR, augmented reality, virtual reality, all the variations that are going to be coming through there, online purchases, apps, robotic process automation, call centers swapping out using artificial intelligence technologies so that those processes are automated. I suppose, how automated do you think companies, especially financial services companies, which are digital, we don't make anything, are going to have to be to survive in this new world and to get this opportunity?
Well, I am biased because I write all the time about digital, so I'm biased up front to say I believe completely in digitalization. And throughout this crisis, the one thing that's kept us all going is the internet. If you think about what life would be like in a lockdown without technology today, if you didn't have this ability to listen to a conversation between yourself and myself in a community of hundreds of people, if you didn't have the ability to get access to Twitter or Facebook or Netflix, what would life be like locked in the house? And the answer is pretty damn boring. So the fact is we can continue to live and work and feel okay in ourselves mentally because of digitalization and the internet. We have got through this because we have this connectivity. I'm watching a lot of TV at the moment, often in the background, but it's obvious that the world has changed, because when I used to go on television, I used to comment on the BBC and Sky and other news services, Bloomberg. They would insist that I had to be in the studio, and yet now almost every person that I'm seeing on television is from their study or their lounge talking about something, and that's because of Microsoft Teams, Google Hangouts, Zoom, Skype. You name it. If we didn't have this world would not work during this lockdown. And that's only going to become more prevalent post-pandemic. The behavioral change that this has forced upon us will actually increase digitalization massively post-crisis.
We've got 3 minutes until we're going to go and call it. I always promise our guests that we will stop on the hour, because I know you're putting up your own time there, and we really appreciate it. But we'll put you on the spot so that you can go on time. What 3 suggestions do you have for leaders to go and handle this opportunities from this crisis post-pandemic?
Read my book, read my book, read my book. No, being serious, read my book. Being serious. 3 suggestions is make sure that you learn all the things that broke down. Get a business continuity plan for your physical operations to match your business continuity planning for your digital operations. Second one is look after the people. The companies that look after their customers and their staff best in this crisis will get far more recognition and market share post this crisis. And the third is that, shareholder return and all that stuff is really important. But at the end of the day, is your value proposition one that matters? Think about how to make yourself more relevant. What can you do that gives customers and society more notice that you actually stood up to the challenge?
Chris, I just want to, on behalf of everyone, say thank you very much for joining us on the call. We really appreciate it. I know the hour goes quickly. I'd love to chat to you a whole heap longer. Hopefully we'll get to chat to you again at some point. But on behalf of everyone, have a safe time over in Poland, and we'll chat with you soon.
Thanks for inviting me, Carl. Take care. And take care, everyone.
Cheers, guys.